Why is lot size so important, and how do you calculate pips in Forex? Hey everyone, welcome to our channel. My name is JF with the Forex Journey. Welcome, welcome. So on this channel we talk a lot about prop firms and our experiences on the way to becoming profitable traders, whether good or bad. So the first question is an easy one. Why does lot size matter? Well, it's very simple. Basically, the lot size is what's the actual size of your position, or in other words, how much are you really risking for every pip that it goes up or for every pip that it goes down. So it's what determines like how much you're going to win or how much you're going to lose depending on how your trade goes. So if your position is too big, you might be over risking. And if it ends up being a winning trade, it's a happy coincidence. But if it ends up being a losing trade, you might have thought you were going to lose 1%, but maybe you lost 10%, and that could be terrible. And on the flip side, if your lot size is not big enough, if your position is too small, you might make a great trade and only make 10 bucks when you thought you were going to make 1,000, right? So you only make a fraction of a percent when you thought you were going to make 1% or even 10%, right? So it's important to have a clear plan so that you know exactly where you're going with your trades. And so you don't have to if you don't have a clear plan, you might be bouncing back and forth between your lot sizes, between trades, and that can make it pretty confusing for someone who's still trying to figure that out. So having a clear lot size strategy basically makes it a lot easier to plan for. So basically, okay, if I lose this trade, I'm down 1% or 2%. I can still take a trade today without, worrying about breaching the rules or anything like that. And you know how much is on the line at every trade you take. So you know how much you're risking and you know how much you're looking to gain if the trade goes your way. So I can't tell you what the perfect lot size is because there isn't really such a thing, and it depends on the pair that you trade and the strategy that you use. But for me, I trade GBPJPY a lot, and I try and get about 1%. I'm trying to risk about 1% for the trade and make somewhere between 2 and 3% depending on the pipage. For me, I know that if I enter a trade, the worst that can happen, if it hits my stop loss straight up, like without any opportunity for risk management, I lose 1%. I don't let it go into the drawdown for 2, 3, 4, 5%, hoping that it's going to go up. Used to do that. Don't do that anymore. And so if it hits my take profit, I'm going to make roughly 2% or maybe a little under 2%. And if I decide to let it run a little bit, I might make upwards of 3% depending on how many pips I get. But so my lot size revolves around exactly that. And so this is kind of geared towards taking a funding challenge as well, so that your losses are managed and you know exactly what you stand to lose every time you make a trade. And you also know what to expect if you have a successful trade as well. So there's a lot of different ways to actually calculate your lot size or your position size. I like to do it using pips and just kind of reverse engineer it to like a percentage. But anyway, that's just me. But so I'll give you two examples, and I'll be using a pip calculator from MyFXBook. So if you just go to myfxbook.com, and at the home section right here, they have a bunch of calculators. Probably the two most common ones for what we're looking at would be the position size calculator and the pip calculator. But I'll be showing it to you through the pip calculator. And for my first example, I'll use EURUSD since it is a very common pair. You just choose your pair, you choose the currency. And so I'll be talking about, all right, using this example, if you have a $10,000 challenge, okay, or a $10,000 account, one pip with one lot size equals roughly $10 based on like the fees and all that stuff. But so for every pip that it goes up, you make 10 bucks per lot on EURUSD, and every pip that it goes down, you lose $10, right? So if it was a $100,000 account, you could just multiply the trade, the lot size by 10, and it would be $100 per pip instead of $10 per pip. But so if we stick to our example, let's say you were looking, so you're trying to calculate how much would I lose if I lost 12 pips on a EURUSD trade with one lot. Answer is 120 bucks. So on a $10,000 account, that would be a little over 1%. And if you were trying to figure out, okay, if I gained 30 pips, how much would I gain? And of course, I mean, with the EURUSD, I mean, it's a very round number, so it's super easy, but with other pairs, it can be a lot more complicated. But so for a 30 pip take profit, you would have made $300, which would be 3%. And so again, the actual numbers vary by the price and by the fees and like what broker you're using and all that. But this is a good idea. Like it gives you an idea of what to look out for. And so here's a different example with GBPJPY. So if you would have in our minds now, let's think of a $100,000 account, right? So with these conditions, 1 pip with a 10 lot size, with 10 lots, every pip in US dollars of GBPJPY is worth 75 bucks. Okay, so it would take about a little over 13 pips to make 1%. So if I risk 13 pips, I'm risking 1%. So if I lose 13 pips on my stop loss, I would have lost 1 full percent. So to make 2%, for example, it would be about 27 pips, so on and so forth. But again, that's my, that's what I'm shooting for. I'm risking about 1% to make around 2. But so like if you were willing to risk about 2%, you would just be looking at about 27 pips. And if you're trying to make, you're trying to figure out how much would 60 pips be worth, it would show you right here, right? So of course, once you've figured out on paper, like what lot size you should be using, test it out in your actual terminal, take a few trades, see if the numbers match up with your broker compared to what the calculator would say, and then you can just adjust a little bit, but at least it gives you a rough idea. So it's really that simple, guys. I mean, figure out what kind of percentage you want to be risking and then just enter some numbers in the calculator and it'll spit out a number for you. And it's so important to have a proper lot size so that you're not over risking. I think over risking is probably the most common problem, but some people may be under risking as well. You don't want to waste all the, like if you take the time to make an analysis on a really good trade, and then you take the winning trade and you take like 100 pips, but you realize that instead of putting it for 10 lots, you had like 0.1 lots or something like that. Like that's happened to me before. So it's just one of those things. It's a learning experience. All right, guys, thanks so much for watching. Make sure you like and subscribe. And I'm gonna link right over here just another video that I made that talks about like things that are really important to have to be able to pass a funding challenge and all that kind of stuff. And things that I found really helpful that I thought that I would share with you. So comment down below what's one part of this video that you thought was helpful, or what's the way that you calculate your lot size, and share it with others. So thanks for watching, guys. We'll see you in the next video.